Welcome back. You're watching Stock Watch with me, Zinati Kuma, and joining me to unpack your stock-related questions tonight are Sanelisiwe Tofile from All Weather Capital and Nader from Benguela Global Fund Managers. Be sure to send your questions via email to stockwatch@bdtv.co.za or via SMS on 41392 or on X at Business Day TV using the hashtag StockWatch. Thank you so much for your time, gents. Quite a lot of interesting movements happened today. Stock-wise, currency-wise. Suddenly, I want to start off with you because the first thing that jumped out at me was the gold miners being so hard hit today, particularly DRD Gold. I think it was down 10, 11% at some point. What is going on with gold there? Because I would think that because of the flaring up tensions in the Middle East that investors would be going for safe haven. Does it have anything to do with the gold price today or what?
Yeah, you'll see that the gold price has actually come off from recent highs. I mean, you will have seen that in the past few weeks it's been reaching record highs for, I suppose, good reason, given the heightened geopolitics that you mentioned. But I think the thing about the weekend's sort of increase or escalating tensions is that, after the kind of tit-for-tat attacks between Israel and Iran, it seems as though both sides have tried to cool the situation down with some rhetoric that seems to suggest that they're both going to take a step back a little bit. So I think from that perspective, the gold price probably took a bit of a softening view. It's not to say that if things escalate again, the gold price won't go back up. But I think if you're looking for what happened over the weekend, I think the fact that both sides have just kind of calmed things down for now. And you also saw that, I guess, Israel's allies in the UK and US and Europe all try to come in and cool the situation down as well. So I think possibly the gold price reacting to just cooler heads prevailing for now. But in the longer term, it could still, go back up again if things escalate again.
Yeah.
And obviously the companies themselves will react to the underlying gold price.
Yeah, and they surely reacted today. Grant, I mean, we've had the sharp acceleration in the shares of these gold miners and really quite a surprise today that they did slump the way that they did. And I'm wondering, because I would imagine that investors have been looking at these stocks, being quite happy, and those that are not in there maybe wanting to get a piece of the pie. Do you think that maybe today's pullback provides some opportunity for investors to go in, or is gold at this point still way too hot for it to be a good opportunity where all the easy money's been made?
Well, it is it is a really challenging time to be buying it. Yes, they had a healthy pullback. 4 or 5%, I think. I'm not sure if it was more than that, but in the context of the move they've had, it's really nothing. I mean, gold itself is back to where it was on Thursday. So,
okay.
it's not really. So short answer is, I think there's some profit taking. It's almost been a bit of, we knew Iran was going to launch a counterattack the whole of last week. It was a question of when, not if. Okay. Gold sort of absorbed that. It had the little buy the rumor, sell the fact a moment. And now it's back to, okay, where are we now? I think if you're in gold, you can stay there as long as the geopolitical landscape looks like it does. I don't see things changing materially in the short term. If you want to buy here, you know that it's a tough position. You're going to be a weak hand, I think, because it's hard to know where the next 10 or 20% is from here. So I would just trade cautiously. I would definitely have a very careful eye on stop losses and things like that if you were to enter a new position here.
Well, talking about rumors, I don't know if there are any rumors that you've heard on Bworld, because there was also another big move today. There was a cautionary announcement that they put out on Sens today. No detail at all. They just said that they're engaged in discussions on something that could affect the share price. Sanelisiwe, any rumors that you've heard? Any speculation there?
I suppose to your comment about how light the detail was in the cautionary, I mean, we can only speculate, right?
Yeah.
my kind of thought process takes me to, firstly where the Barlow share price has come to. Obviously, it's sold off quite a bit in the past few months.
Yeah.
It's gotten to it. I mean, look, South Africa or the JSE generally has become quite cheap relative to other markets, but Barlow's share price has taken a big hit, so it's become quite cheap. And especially if you consider the underlying sort of, the mining equipment business is not doing terribly at the moment. So it doesn't sort of justify where the Barlow share price has gone. The one sticking point might be that I think especially for local investors, they might be having a bit of a contentious relationship with management, which then, guys are a bit unimpressed with how the team has handled things up to this point. So maybe that's a key thing. But I think regarding the cautionary, it's possible, and if you look at how the share price has reacted, it's possible that it could be a sign that because it's so cheap, someone is possibly making a bid or preparing some kind of bid for Bworld. I think if it is a acquisition by Bworld, that will probably be negative, and you might see the share price gains from today reverse. But I think we're really just speculating, but it's possible that someone is coming in with some kind of bid for Bworld, given how cheap it is. I mean, there is a strategic shareholder within Bworld who had tried to kind of come to the table and buy, take out Bworld a few years ago, and that deal fell through. But it could be possible that they've come back to the table again. But at this point, who knows? But yeah, it's interesting to speculate, as you said.
Grant, is there anything on your side that maybe you're feeling investors would like to see from Bworld, considering by the share price reaction today, and maybe regarding the whole business or maybe parts of the business?
I think everybody's hoping that they sell this business. It was an ill-considered purchase in the first place. It hasn't added any economic value, and I think we'd all be a lot happier if they sold it. As Sanelisiwe said, the share's trading below 7 times historic earnings.
Yeah.
So it is incredibly cheap, and that tells you a market is unhappy with what they see. And this potentially could unlock some of that trapped value, because the core Barlows is still a fairly solid business.
So which business is that? The Ingrain business?
Ingrain. We're talking about Ingrain.
Yes.
To my mind, it doesn't really fit the portfolio. I never understood why they did it in the first place, and it hasn't been a success. So I would like to see them exit. If they're doing something else, if they're acquiring some more in the space, I think it will be taken very negatively as well.
All right. There is a question here on the JSE. The JSE Aussie has grown by 28% over a 5-year period and 56% over a 10-year period. Or about 5.6% per annum. This compared to SA long-term interest rates of 9 to 10%, both before tax. So why should investors bother about investing in JSE equities? Sanelisiwe, you mentioned there that they're quite cheap, but also there also is a narrative that could lead to a value trap. Why should people bother on investing in JSE equities?
If there is, in fact, a value trap, I think investors will need to make up their own minds about that. But if I look at what's kind of in front of me on the table right now, it's hard to escape the realities of our macroeconomic and political situation. So I think over the long term, say a 5 or 10-year period, as the listener's question suggests, if growth is slow, the politics is deteriorating, infrastructure is deteriorating, and things like that, then it will impact the broader market, especially, the SA Inc. type shares, not necessarily the other type of shares. So from that perspective, it's hard to escape, that reality. But I think if we can get reform, we're coming into an election year now. So if you can get some kind of reform, whether it's some kind of election outcome that forces whoever is in power at the time of post-election to kind of do the right things for the economy, then a case can be made for keeping your investment in South Africa. I think what we need to do is just make sure that we get back to a growth path that is sustainable, to sustain employment and to sustain economic activity. I think in the longer term, the market can't escape those things.
Grant, on your side, is there a case to be made for JSE, or should people just completely ignore it?
No, definitely you shouldn't ignore it. There's a right price for everything, and remember, not all stocks are made equal. So I'm sure if you look carefully, you'll find easily 15 or 20 stocks that have performed materially better than those numbers suggest. Just think of the likes of a Capitec or a Clicks or a Richmond. There's plenty, Bidcorp, that have delivered, multiples of that number. And the second thing is that number did sound very low. I'm wondering if it isn't a price return rather than a total return. And if you add the dividend into that, there are a lot of healthy dividend yields to be had on the JSE as well. The banks, for example, are yielding 7-8%. So it's not as bad as it looks. It does require you to roll up your sleeves and do a bit of work, though. If you want to if it's hard or you're not comfortable doing that, find a fund manager who's comfortable doing that, an active manager, or put it into ETFs or diversify your portfolio. But I think there are opportunities to be found, especially at times like this.
Yeah. Yeah, indeed. I was even going through technical analysis on the JSE and the broader market and some of the counters on the JSE. It was quite interesting. I forgot the time period, but the JSE, the graph was showing the JSE was up just 1% over that period. But Spur was actually up 42%. And then you had an underperformer, Sasol, down 38%. So you really do have to do your homework and actually look at those individual stocks. Let's go into banking. There is a question here on Investec. Let me just try and find it. There we go. Is Investec viewed to be a decent long-term investment? Or would the panel favor another domestic bank such as First Rand or Standard Bank? Of course, this conversation again, do you go for locally focused stocks or maybe one that does have exposure to offshore? Sanelisiwe, Investec and Investec versus domestic banks.
So, I mean, Investec is an interesting case because obviously relative to the SA banks, it gives you, I guess, hard currency earnings, or sort of roughly half the business hard currency. It's a business that's been in a bit of a restructuring over the past sort of 18 to 24 months, and they've done very well up to this point. I think now it's a bit of an execution story around growth. If you look at, I guess, one of their targeted growth markets being the UK, they are quite a small fish in that pond. So I think if they can, gain market share in some of the product segments that they're looking to target, that can be something that keeps the earnings ticking over. Obviously, the kind of pound earnings, if the rand keeps weakening, that will kind of add, that hard currency, like I said. And I think, another thing that the business needs to do is kind of right-size kind of their, I suppose you can call it, their capital stack in order to kind of make sure that they earn a capital return above their cost of equity, which is one of the things that Investec in the past has struggled with. So I think there are a few vectors and things for management to do to kind of improve the return. They do have an opportunity for growth. It is, in fact, still quite a niche bank in South Africa as well. So, if they can maybe broaden the product somehow, I mean, I want them to dilute I wouldn't want them to dilute their efforts in areas outside the expertise, but it is still a relatively niche and small bank. So there are some growth areas, but if they can fix, their return to kind of beat cost of capital, I think there is an opportunity there.
All right. Grant, would you be favoring Investec or a domestic bank, FNB or Standard Bank?
Look, if you're going on history and on what they've achieved in the past, First Rand or Standard Bank are significantly better opportunities. They've delivered, much higher ROEs. They've returned capital. They've added value relative to shareholders' equity at a much higher rate than Investec. But so you should expect them to continue to perform well. Standard Bank's got fantastic operating momentum at the moment. They're doing all the right things. I think they're both good opportunities. If you look at Investec, they have been trying hard to restructure and reposition the business, sort out the capital structure, as Sanelisiwe said. So I think if you back management to get it right, there is execution risk there. They don't have a good track record of creating value for shareholders, only value for employees or owners, let's say. So I think, you've got to have some faith there. It's a slightly riskier play, but of course, a bank that moves from 13 or 14% ROE to 16 or 17 will deliver some nice returns. But the guarantee of that happening the chance of that happening is much lower then Standard Bank, that's already doing it, and First Rand, that's close to 20%. So it's a different risk profile, in my opinion, and the one is not as good an operator as the others.
All right, we're talking about different risk profiles, lots of risk, transaction capital. What on earth is going on with transaction capital? I get the We Buy Cars listing, but it's tanking. Today was bloody. I mean, that's also something that people have been asking, because we did see it tanking from like 10 Rand to 3 Rand, I think last week Friday. And now there's been a 15% hit on the share price again today. Is part of this tanking a function of the We Buy Cars listing, or is there just no rule that says that when a company does unbundle part of its operations, that it's going to tank? What's actually going on here, Sanelisiwe?
So, I mean, I can't quite remember the transaction capital price when they bought We Buy Cars. I mean, it must have been probably in the 20s somewhere. But at that time, you know, they still had what they call Newton now and SA Taxi. So what's happened now with this unbundling is that they've gone back to that. You know, so it's essentially unbundling We Buy Cars to investors and gone back to just being Newton and SA Taxi. The difference between then and now is that investors are questioning whether SA Taxi is worth 0 or potentially some negative number, and then, you know, how much Newton is worth. And that's why the share price is struggling to really find any direction, in my view. Obviously, you can sort of quibble about what the value for Newton is. I think in my kind of discussions with people around town, seems 5 Rand was a number people were thinking about. You have to question what the multiple is on that. And then obviously with SA Taxi, with the troubles they've had in the past couple of years, the debt burden that they're facing and how to restructure that business has been the big question mark. So I think most investors for now have valued that business at 0, but I think the question mark is whether or not there's actually some additional cost to either running SA Taxi or closing SA Taxi or whatever the case may be. So I think that's where the uncertainty lies. You know, how much of the taxi problems are going to bleed into the whole remaining TCP.
There seem to be so many questions at this point. Grant, what does one do as a person who was holding on to transaction capital until now?
You better hope We Buy Cars continues to go up, because you would have got those shares at least. But no, so I think that Sanelisiwe hit the nail on the head. Really, we don't, you know what's left in there, but you don't know what it's worth. Transaction at SA Taxi had north of 15 billion Rand worth of debt. The company's market cap is 2.2 billion Rand. So it's not even clear that this core, what's left of this business, is a standalone viable business. Yes, there's Newton and Gomo, but I mean, they are going to be dwarfed by this SA Taxi debt. It's also not clear how closely interlinked and what the cross claims are across the different business entities that still are there. So if SA Taxi goes under, does it drag everything under, or is it ring fenced to some extent? Part of the attraction of We Buy Cars was they extracted themselves from that connection, from that any further claims, in settling settling a large number. I think it was 900 million odd, to walk away from any future claims at all. And that has been sort of set free. But I don't know if that speaks for the rest of the business. So there's a lot of overhang there. That's the first and main thing, I suspect. But you also might find anyone left holding SA Taxi is just dumping it now, because if you held it before, you really held it to extract the We Buy Cars value opportunity. And what do you want to hold it for now? You know, unless you have a very strong view on it. And there's a lot of shareholders in there, and I suspect there's just some people heading for the door. There's no real point in holding it here unless you understand that business very well.
Yeah. All right. Well, let's go into platinum shares. Talking about the big moves that we saw today. Give your view on a platinum share for a buy. Of course, I'm guessing that considering the hammering that they took today, that especially implants, that some investors may be looking for opportunity there. Sanelisiwe, would you be considering platinum shares a buy? Of course, we also have, financial institutions like Coronation completely leaving that sector?
Yeah, I mean, so if you're a patient investor, long-term horizon, and you look at the long-term charts for these platinum shares, look at the long-term charts for the underlying commodities in the PGM sector, you can make a case for buying. Obviously, it's difficult to time the market, but if you're looking at kind of how the cycles go, you can make a case for buying. I think today's moves are probably, similar to what Grant said earlier about the gold shares, probably a bit of profit taking on the back of a very strong sort of a week or two in the platinum names, that have come out of. Again, I can't quite remember where the platinum PGM prices closed off today, but I'm sure they were somewhat lower. And so these companies will follow that. I think the longer term drivers around PGMs, obviously, I think the main industrial use being in automobiles, that's always got a question mark when you've got question marks around global growth, as we are sort of having right now. We've got high interest rates around the world, you've got inflation, you've got also all those kind of problems. I mean, the US economy is holding up pretty well, but there's question marks about how long that will keep on going. So there are a few questions around that. And obviously, I mean, I think the platinum market certainly is in a bit of a surplus right now. I can't be sure around palladium. I'm sure it's also in and around sort of surplus conditions. So that always puts pressure on pricing. So I think if you are, like I say, if you're a long-term investor and you can look through these cycles, then sure. I mean, these names can actually give you great returns. But if you are sort of a bit of a cautious investor, I would say you probably want to look for more positive signs that growth is coming back.
Yeah, but looking through is not easy. Yeah, we know that to get to the other side, you do need to go through it. Grant, would you be willing to go through it at this point or not?
We all say yes until we're 30% out of the money, and then the story changes. I think you have to be careful, especially as if you're investing on your own at home. These things are highly volatile. As much as you try and be clinical and unemotional, it does play on the emotions. And you could see at 30% down from here as easily as you could see 50% up. So the PGM miners, the bosses, all had a big conference last week. They all see stability this year and improvements next year. Of course, they're talking their book. So it's hard to know if that's real, but that's what they see in the supply and demand outlook. I think it's a tough story. There's a lot of crosswinds. You've got the declining demand for the traditional cars, but you've also got hybrid and hydrogen economy demand that's growing. So longer term, it's unclear. They may go okay longer term, even though Coro and the like is stepping away. So I don't see any compelling need to be rushing into these. But if you want some volatility in your portfolio and you enjoy the opportunity it gives you if you get it right, then stick your toe in the water, but just do it in a manageable size relative to the volatility you're going to get for it.
I am being naughty because we have very little time. I should be going to your stock picks, but just sticking with you, Grant, I want to squeeze in this question. Would it be prudent to sell Old Mutual and rather buy Sanlam for long term?
My answer is yes.
Okay.
Sanlam I still remember when Old Mutual went overseas in this big acquisition spree. They bought Scandia, they bought a big US asset manager, and they destroyed billions and billions and billions of shareholder wealth. I have not seen anything since then to indicate that culture has improved materially in any way, even though they've come back to South Africa and it's all inward focused. Sanlam is by far the better operator, the better corporate culture, the better track record, and I would put my money on them hand over fist, even though they're slightly more expensive. Okay. Because you get what you pay for.
Sanelisiwe, quick yes or no? Sell Old Mutual to buy Sanlam.
I think I'll have to disagree with Grant here a bit. Question marks around management, agree, but I think the valuation is just too compelling. I think if you look at where Sanlam is trading in and around the embedded value, Old Mutual is probably trading at a 40% discount, maybe even 50% discount at these levels. So I think there's value there, despite all the valid reasons that Grant has to not go there.
Perfect last debate. Let's wrap it up with your stock pick, Sanelisiwe. I think I have 20 seconds each. Sanelisiwe, what is your stock pick for today?
I'll be quick. I'll pick Grindrod. I think, with all the sort of logistics and ports issues that we've had in South Africa, they are in a good position to benefit. They own, I think, it's about 25% of the concessions out of Maputo. So that port has benefited from the problems from Durban and Richards Bay and the likes. And I think they've got a good valuation as well, good management team. So I think for now, given this market they're servicing, it's a good place to be.
All right. All right. On your side, Grant?
My pick is Bidcorp. They a good 15% off the highs. They've been underperforming, which is great. It presents a nice entry opportunity. You're getting global exposure, world-class management team, and they are hedged if the interest rates continue to remain high or even rise. If inflation rears its ugly head again, they have pricing power because they operate in that consumer staple space. They give you rand hedge quality and a good management team. I think it's a sleep at night stock in this very uncertain and unclear environment that we're operating in. And so that would be my pick.
All right. Well, thank you so much for your time, gents. Really, really appreciate it. That is all for tonight's Stock Watch. Thanks to our guests, Sanelisiwe Tofile from All Weather Capital and Grant Nader from Benguela Global Fund Managers. Up next, The Close. Stay with us.